Hi everyone, Loaded Forest here. In today's video, I'm going to show you the top-down day trading analysis and some of the setups we are anticipating in probabilities on pounds against US dollar and US dollar against Canadian dollar. If you're new to this channel, please don't forget to like and subscribe so that YouTube can notify you the next time I upload useful video content. Let's go guys.
Looking at the market view from the higher time frame, you can see clearly that we are having a falling wedges on the daily time frame of pounds against US dollar. You pick your trend line tool from this zone to this zone and the upper down trend line from this zone to this zone. You can see clearly that the market is already giving us a formation of falling wedges for bullish continuation pattern, whereby we can have something like this, a price formation like this, for the market to be able to give us a bullish movement to the upper side of the market. And another perspective of the market, we are expecting market to close above this downtrend line to give us a break and retest on this downtrend line for us to be able to long the market to the upper side. Another perspective of the market, we can see clearly that the market is already giving us a sharp pattern on daily time frame, and the chart pattern is inverse head and shoulder, an incomplete inverse head and shoulder on the daily time frame. We can see that this is shoulder and this is edge of the inverse head and shoulder. Then we are anticipating market to close at the second leg of the inverse head and shoulder for us to be able to buy the market to the upper side. That is the second market view that we are anticipating for the week. The third view is we are anticipating market to come back to the lower downtrend, give us some price action that represent the presence of buyers around this zone for us to be able to long the market to the upper side. On the 4 hours time frame, we can see clearly that market has already broken this down trend line, whereby this zone was serving as a resistance, but we have a breakout of the resistance already and also a breakout of the trend line already around this zone. We are waiting for another 4 hours candle to break out of this resistance properly, then give us a break and retest around this zone in anticipation of W pattern for us to be able to long the market around this zone. This zone is our first point of interest. While this zone is our second point of interest. If we are unable to get price formation around this place that represent the presence of buyers around this zone, the next point of interest we are anticipating for us to be able to buy this market is the second leg of the inverse head and shoulder. We are expecting a W pattern around this place for us to be able to buy the market to the upper side. The third market view, we are anticipating for market to sell down to this zone on the third touch of the lower downtrend line, give us a W pattern for us to be able to long the market to the upper side. Remember, our rule says no signal, no entry. That we have analyzed the market, that doesn't mean that if market comes to our point of interest that we're going to take any trade decision in the market. If market come to our point of interest and we're unable to see price reaction or presence of buyers around this zone, we are not going to take the trade. Or if price come to our second point of interest, we are unable to see any presence of buyers around this zone, we are not going to take the trade. If price come to the third point of interest and we are unable to see presence of buyers around this zone, we are also not going to take the trade. But if price is able to talk to us, give us a presence of buyers or bullish candlestick formation around this zone, to give us a full confidence, like 80% or 90% presence of buyers around this zone, then we have the confidence to be able to buy the market to the upper side. Remember, no signal, no entry. This zone is our third point of interest for us to be able to buy the market to the upper side. 1 hour is our entry time frame. These are the things we are expecting. We are expecting the proper W pattern around this zone for us to be able to long the market to the upper side, or we are anticipating market to come back to this zone here, give us a W pattern for us to be able to long the market to the upper side. On the daily time frame, market has already given us a market pattern that represents bullish continuation pattern. This is a clear falling wedges, a clear falling wedges for the continuation of the bullish movement to the upper side of the market. The next pair on our watch list for the week is USDcad. This is daily time frame of USD against Canadian dollar. On the daily time frame, the current market trend on the daily time frame is uptrend. Market has been giving us a series of higher high, higher low, then we have another higher high, higher low, then higher high. At this zone, we are anticipating for market to give us a retest back into this zone for continuation of the bullish movement. Looking at the daily time frame, we already had a trend line breakout around this zone. This zone was serving as a resistance. Now it has turned to broken resistance, turned to support. The next thing we are expecting is for market to give us a retest back into this broken resistance, turned to support for us to be able to long the market to the upper side. Whenever you see spinning top at the end of a bullish trend, it's a sign of bearish reversal pattern. That means the seller are ready to take charge of the market, to set the market down to this zone. You can see the presence of the spinning top at the end of this bullish movement. This is a bearish reversal candlestick pattern, and at the same time price might continue the bullish movement, but what we are anticipating on the daily time frame is for market to sell down to this zone for us to be able to buy the market to the upper side on USDcad. This is 4 hours time frame. There are some confluences we have already in check on 4 hours time frame. Number one, we have our broken resistance turn to support. We have our support zone around this space. We also have a trend line breakout around this zone. Then the next thing is our Fibonacci level. This space was the last higher low, then back to this recent high. We are anticipating for market to come back to this zone, to the Fibonacci level of 0.618 or 0.786. Give us presence of buyers around this zone, bullish candlestick pattern for us to be able to long the market to the upper side. 1 hour is our entry time frame. We want market to sell down to this space to give us a W pattern for us to be able to long the market. And if we draw the Fibonacci level from this recent higher low to the recent higher high, this zone is going to be our point of interest, whereby we are anticipating presence of bullish candlestick for us to be able to buy the market to the 100% Fibonacci level. This zone is going to be our first take profit, while the Fibonacci extension level is going to be our final take profit. This zone is going to be our take profit 1, while this space is going to be our take profit 2 on USD against Canadian dollar. Remember, no signal, no entry. See you next time, guys.